They told you it was just business. They told you it was just another Twitter spat we've all gotten used to over the last few years. They lied. What is going to happen in less than 10 days isn't trade. It is daylight robbery, elevated to the rank of US state policy. Listen closely. Turn off the noise. Forget what the White House press secretary or the bewildered bureaucrats in Brussels are saying. We are looking in the wrong place. February 1st, 2026. This date is now burned into logistics maps from Rotterdam to New York. It is on this day that an executive order comes into force that will turn the Atlantic Ocean into a war zone. Not with missiles, but with tariffs capable of destroying an economy faster than any bombardment. We have entered a phase that is whispered about on closed Wall Street terminals as Sell America. And the irony is that this time, America isn't for sale. America has come to take what is hers. Do you think Trump wants to buy Greenland? No. He wants to buy the future, and he is ready to bankrupt half of Europe to get that receipt. Look at the charts. On January 20th, Martin Luther King Day, while American exchanges were sleeping, the world changed. Silver smashed through its historical maximum, reaching nearly $96 per ounce. A 36% rise in just 3 weeks of the new year. This isn't market noise. This is an air raid siren. The smart money is running. They are fleeing the dollar. They are fleeing debt obligations. They are fleeing into the only thing that cannot be printed on a phone call from Washington. Why? Because there is an ultimatum on the table. Let's break down the crime scene. Facts that the tabloids are diligently obscuring. The US administration has drafted an order to impose 10% import duties on goods from 8 European Union countries. This isn't abstract Europe. These are key NATO allies: Germany, France, Italy, the Netherlands, Sweden, Finland, and of course Denmark. But look closer at the text of the document. This is a piece of evidence many missed. 10% is just a warning shot. The order contains a built-in timer. If a deal to transfer Greenland to US jurisdiction is not concluded by June 1st, 2026, tariffs automatically skyrocket to 25%. The official version sounds heroic. Ursula von der Leyen in Davos called the threats a mistake and promised an unwavering response. Danish Prime Minister Mette Frederiksen stated that sovereignty is not for sale. Beautiful words. But the market hears something else. The market hears the sound of global supply chain backbones snapping. Because an unwavering response means a trade war of annihilation. You ask, why? Why risk the collapse of NATO for an icy wasteland? That is the main deception. You are being shown a real estate map, but in reality, it is a survival map. US Treasury Secretary Scott Bessent let it slip on January 21st. In an interview, he dropped a phrase that should have been the headline of every newspaper but drowned in the noise. He said that control over Greenland is necessary to prevent a kinetic war and ensure hemispheric security. Kinetic war. In military speak, that means actual combat operations. Greenland is a storehouse of uranium and rare earth metals, without which fighter jets won't fly and guidance systems won't work. Trump isn't buying an island. He is trying to monopolize resources for the military-industrial complex in the face of a global conflict, and he is ready to go all in. Investors in Asia understood this first. On January 20th, Shanghai and Tokyo began a mass dumping of assets, fearing devaluation and logistics ruptures. But there is one more layer that makes this situation truly explosive, and it's not in Greenland and not in Brussels. It is in Washington, inside the Federal Reserve Building. Parallel to the external ultimatum, an unprecedented internal crisis is unfolding in the US. For the first time in history, the Department of Justice has opened a criminal investigation against the sitting Fed chair, Jerome Powell. Officially, it's a case of embezzlement regarding office renovations, where the budget grew from $1.9 to $2.5 billion. Laughable. On the street, everyone knows the truth. This is a public flogging. Powell himself stated in a video address, "This is punishment for refusing to follow the president's preferences." Do you understand the physics of the process? On one side, geopolitical blackmail. On the other, an attack on the money printer. The dollar is no longer a safe haven. The dollar is a weapon, and it is firing on its own side. That is exactly why silver costs $95. That is the price of distrust. Let's freeze time and look at what happened in the markets on January 20th. If you want to understand the future, you need to break this day down minute by minute. This isn't just a chart. It is a crime scene where faith in the dollar's stability was murdered. Tuesday, January 20th. A holiday in the US, Martin Luther King Jr. Day. American banks are closed, the perfect time to strike. While Wall Street sleeps, Asia wakes up. Traders in Tokyo and Shanghai are the first to react to news of tariffs against the EU. They realize if logistics grind to a halt, dollars will turn into worthless paper. Aggressive buying of physical metal begins. The market opens with a gap up. The price immediately skyrockets to $94.57. This was a death sentence for the bears, those betting on silver falling. They were simply obliterated. What happened is what professionals call a short squeeze, a clearing out of short positions. But the scariest part started later. When London came online, liquidity vanished. Market makers, spooked by the political chaos, simply stepped aside. Spreads widened. At that moment, we saw an anomaly that happens once a decade. Different exchanges showed a different maximum price, from $95.34 to $95.90. Think about that. A spread in quotes of half a dollar in the most liquid market in the world. It means arbitrage broke. It means the system glitched. The panic was so intense that no one knew how much an ounce of silver actually cost. They knew only one thing. It costs more than yesterday. Why silver specifically? Why not gold, not Bitcoin? The answer lies in a report released that same day, January 20th, which went unnoticed by the majority. Pan American Silver, an industry giant, published data. Seemingly good news, they mined a record 22.8 million ounces in 2025. But the devil is in the cost column. The forecast for production costs in 2026 soared to over $18 per ounce. This is cost inflation. Energy is getting more expensive, equipment is getting more expensive. Mining metal is becoming harder. We have been in a structural deficit for the 5th year in a row. The Earth no longer yields cheap silver. Now add demand to the mix. We are building a world of artificial intelligence. Data centers training neural networks require gigantic volumes of energy and cooling. Silver is the best conductor of electricity in the universe. Without it, AI remains just code on a flash drive. Solar panels, which Europe is betting on to move away from oil, also require silver. And this is where the trap snaps shut. On one side, Trump, who is breaking global trade and stoking inflation with his tariffs. On the other, a physical shortage of the metal needed by everyone, from the military to IT specialists. Investors understood. There can be any amount of paper money. The Fed can print trillions, especially if they squeeze Powell with a criminal case. But you cannot print silver. Look at capital flow statistics. ETFs backed by physical metal are showing returns above 25% year to date. People are taking metal out of warehouses. This is a flight to reality. Analysts call this the Sell America trend. Foreign investors are cutting their positions in US stocks and bonds. They are afraid that political risks in Washington have become incompatible with capital preservation. Today, January 21st, the market has frozen in nervous consolidation. The price is hovering around $94. Some are taking profits, thinking the rise was too fast. But look at the RSI index. It shows divergence. This is the calm before the storm. Everyone is waiting for Davos, waiting for 2:30 p.m., because the words spoken there will determine if we see silver at $100 by the end of the week. And judging by the rhetoric from the White House, the brakes on this train failed a long time ago. To understand where we are going, we need to rewind 48 hours and look at what actually happened on the trading floors. This wasn't normal volatility. It was a system failure. Look at the timeframes for Tuesday, January 20th. While America was observing Martin Luther King Jr. Day and the banks were closed, the silver market was left without adult supervision. And it was at that exact moment that the bears, those betting on a drop, walked into a lethal trap. The compressed spring of weekend news uncoiled instantly. Trading opened with a gap up. The opening price was $94.57. For a trader holding a short position from the $89 level, this was the instant death of their account. This is called a short squeeze. Algorithms, seeing the losses, began automatically buying back positions at any price just to close out. And this fuel pushed the price even higher, creating a chain reaction. But the most interesting part happened when London entered the game. Liquidity suddenly evaporated. Major market makers, spooked by the political chaos and Trump's threats, simply stepped aside. Spreads widened to unseen levels. At one point, different data sources were showing peak values with a discrepancy of nearly half a dollar. Some recorded 95.34, others 95.90. Think about that. In the most liquid market in the world, no one knew the exact price of the asset. The arbitrage between the spot market and futures broke. This is a break in reality. They show you numbers on a screen. But if you try to buy physical metal at that price, they tell you, sorry, there is no metal. Statistics confirm it. On January 18th, the difference between the daily high and low was just 20 cents. On January 20th and 21, this range exceeded $3. The market shifted into price discovery mode. And this price is located far higher than what the global economy is used to. Why is this happening? Because investors have stopped looking at silver as a commodity. Now, it is insurance against system collapse. ETF funds are recording massive inflows. Year-to-date returns have already exceeded 25%. People are taking their money off the casino table and exchanging it for chips that cannot be canceled. But there is a force acting much more powerfully than investor fear. It is the physics of the process. And here, we approach the hidden engine of this crisis. Let's look away from the charts and look into the ground. Literally, on January 20th, the same day prices were smashing records, a report came out that most missed. Pan American Silver, an industry giant, published its figures. At first glance, everything looks great. Record production, nearly 23 million ounces in 2025. You would think the market should be flooded with metal. But look at the other line. The forecast for all-in sustaining costs, AISC, for 2026 skyrocketed to $15.75 to $18.25 per ounce. This is cost inflation. Energy, equipment, labor. Everything is getting more expensive. But that's not even the main point. The main point is that the market has been in a structural deficit for the 5th year in a row. We are pumping more out of the ground than we are finding. And here enters the factor politicians are silent about: the technological imperative. We are building a new world, a world of artificial intelligence and green energy. AI isn't just code in the cloud. It is giant data centers consuming oceans of energy. To transmit this data without loss, you need the best conductors. Silver is the most electrically conductive metal in the universe. Without it, your Nvidia chips, your server racks, and your cooling systems are just a pile of silicon and plastic. Demand from AI is growing exponentially. Add solar energy to this. Europe, trying to escape oil and gas dependence, is covering roofs with panels. Photovoltaics are the main devourer of silver. Attempts to replace it with copper failed. Efficiency is lost. And in an energy crisis, every watt counts. We have collided with a classic economic trap. Inelastic supply meets inelastic demand. What does this mean? On one hand, miners cannot instantly increase production. It takes 10 years to launch a new mine. Even if the price hits $200, there won't be more silver tomorrow. On the other hand, Apple, Tesla, and weapons manufacturers cannot stop buying silver. They need the metal at any price, or the assembly line stops. The only way to balance this equation is price. The price must become high enough to force someone to give up the metal, but who will refuse? The military-industrial complex, which needs missiles to defend Greenland, or big tech building AI? No one will back down. That is exactly why the current price pullback on January 21st to 93 to 94 is an illusion of calm. Technical indicators like the RSI show overbought conditions and bearish divergence. Traders are taking profits before Trump speaks. But fundamentally, the spring is only compressing tighter. Jerome Powell, under investigation, cannot raise rates to crush inflation without crashing the US debt market, which foreigners are already fleeing. The Sell America trend is already a reality. The dollar is weakening, the DXY index is falling, and a weak dollar is gasoline on the bonfire of commodity prices. We are at a point where geopolitics, the threat of war for Arctic resources, and geology, the exhaustion of accessible reserves, have synchronized. This is the perfect storm. And now, as the whole world looks to Davos, a man will step onto that stage who can, with one word, turn this storm into a hurricane. Scenarios are already on analysts' desks. If Trump confirms the hard line, if he attacks the Fed from the podium again, the $96 level will be broken instantly, and we will see $100 per ounce faster than you can refresh your broker's page. But if he offers hope for a delay, we will see a sharp dump. Sell the news. Prices could drop to $88. And do you know what the smart money will do at that moment? They will buy, because they know the ultimatum on Greenland hasn't gone anywhere, and the deficit of the metal is eternal. Now let's step away from the terminals and look out the window. Do you feel this dissonance? The gap between what they tell you from the podiums and what you feel in your bones? This is the reality gap. On one side of the screen, Ursula von der Leyen in Davos. She is smiling, she speaks of unity, she promises an unwavering response to Trump's threats. The Danish Prime Minister echoes her, assuring us that the worst may be ahead, but sovereignty is not for sale. This is the facade, a picture for the evening news designed to calm the electorate. But on the other side, the street, a reality where investors managing trillions no longer believe a single word. While politicians talk about stability, capital is fleeing. Analysts are recording a global sell America trend. Foreign money is exiting US assets. Asian markets are falling because they know if America starts a trade war with Europe, the global economy halts. They tell you, these are just negotiations. But the silver market, smashing through $95, screams, this is war. Silver is acting here as a lie detector. Unlike bonds or currencies, silver has no counterparty risk. It cannot be devalued by a decree. It cannot be frozen by sanctions. In a world where Russian Foreign Minister Sergei Lavrov openly calls Greenland a colonial conquest and disputes Denmark's rights, the risk of a direct military clash in the Arctic becomes tangible. That is why we see this paradox. The dollar falls, stocks wobble, while silver and gold hit historical highs. This isn't speculation. This is the instinct of self-preservation of capital, which has realized that fiat money has become a weapon, and this weapon is now aimed at everyone. We are approaching the finale, the moment after which there is no turning back. Right now, as you listen to this, the timer is ticking. Wednesday, January 21st at 2:30 p.m. CET. Donald Trump will take the stage at the World Economic Forum in Davos. This event will be the main market mover of the year. We have two futures and they are mutually exclusive. Scenario 1. Probability 30%. Trump softens his rhetoric. He hints at delaying tariffs, speaks of friendship. At this moment, the market will exhale. Speculators will start taking profits. The buy the rumor, sell the fact principle will kick in. Silver could sharply pull back to 88.90. But remember, for institutionals, this won't be a crash, but a gift. They will buy up this dip in a matter of hours because the fundamental deficit isn't going anywhere. Scenario 2, probability 60%, Trump escalates. He confirms the ultimatum, Greenland or tariffs. He attacks the Fed and Jerome Powell again, right from the podium, undermining the last remnants of trust in the dollar. If this happens, we will see what traders call a melt-up, a vertical takeoff. The 96R level will be broken instantly. The target of $100 per ounce will stop being a forecast and become reality before the end of the week. Treasury yields will soar as the world begins mass dumping US debt, and the dollar will continue its fall. There is also a third scenario, the chaos scenario, probability 10%. The announcement of measures no one is ready for. Withdrawal from NATO, asset confiscation, blockades. In this case, trading will simply be halted because panic will break the exchange mechanisms. What should you do in this situation? Stop thinking about silver as a way to make a quick buck. That is yesterday's thinking. We are witnessing a paradigm shift. The events of the last 48 hours, the attack on the Fed, the ultimatum to Europe, the battle for Greenland's resources, have shown us a new reality. In this reality, the dollar is no longer a neutral arbiter. It has become a political instrument. And when money becomes politics, the only real money is assets that do not depend on governments. Silver, which costs $94 today, isn't just an expensive metal. It is a symbol of distrust in the system. It is a bet that the green transition and artificial intelligence will require resources that are physically in short supply. We are standing on the threshold of the real assets era, an era where what matters isn't the balance in a bank account that can burn up in inflation or be blocked, but ownership of something you can touch. If Trump pulls the tariff trigger on February 1st, the world will split into economic blocks. Logistics will collapse, prices will soar, and those who manage to move their paper wrappers into metal will find themselves in an arc in the middle of a flood. Look at the chart one more time. That isn't a line on a screen. That is the cardiogram of a dying financial system as we knew it, and the birth of a new one. The only question is whose side you will be on when the final gong sounds. This is no longer economics. This is survival. End transmission.